Claudia, let's start with the RBNZ as well. I mean, this was quite a hawkish move, quite aggressive move to be one of the first among DM central banks with a 50 basis point hike. How much further can they go when it comes to the rate hiking cycle, you think?
Yeah, well, my colleagues in Sydney will be delighted, Michaela and Sam and Tony, who've been calling for this 50 basis point hike by the RBNZ. How far can we go? We think that we'll get to 225 by the beginning of next year. Let's see how the quarterly inflation numbers come out next week. That may give us some more guidance in terms of ex post justification, but we think we're on track for 225.
Wow. In terms of what drives the FX markets right now, do you think that in terms of the Kiwi, the moves that we're seeing, are the rate differentials still the biggest theme here? And is the dollar still going to be the most dominant in terms of the market thinking right now, the strength that we've seen in the greenback?
Yeah, it's quite tricky. I mean, it's almost like a photo finish in terms of who's hiking 50. We'll get the Bank of Canada potentially tonight as well, doing another 50. But it's a combination of commodities and interest rate differentials. Clearly, when you look since the tragic events of February 24th, we've had basically the Kiwi, the Aussie, the CAD outperformed the US dollar as a function of the commodity prices as well. I mean, I'd be keenly watching as well the Aussie-Kiwi cross because the expensiveness in terms of trading Kiwi, we think that maybe a lot more positions have been trading around Aussie-Kiwi as well. So whether we get a bit of outperformance on the Kiwi relative to the Aussie, which up until now it's been more of a commodity theme that's led the Aussie dollar to outperform. So whether we start leaning more on the side of interest rates, we'd watch the Aussie-Kiwi cross in that regard.
Claudio, isn't it true that a flatter U.S. curve doesn't necessarily mean a strong dollar? What's really driving that narrative for the dollar?
Yeah, well, you look at your curve and you take your view. I mean, yes, some people have looked at the nominal curve. Some people are looking at the real curve and looking at real rates, suggesting, well, if real rates lift higher, that will lift the dollar higher. So I do think the risk is that we are potentially approaching an inflection point, but that may come to the third quarter. There are some signs, sporadic signs, initial signs of weakening. But for the time being, it looks as if the dollar will continue to lift higher. What signs of strength that we've had in other currencies, such as the commodity currencies in the G7 or the G10 and the emerging market currencies, have been very, very narrowly focused. So in EM, you're just looking at the LATAM currencies and dollar renminbi holding the EM FX complex slightly marginally stronger against the dollar. But if we get a weak print on China trade data today and we get dollar China crossing, dollar renminbi crossing 640 to 200-day moving average and an MLF cut on the Friday, and we get more signs of a slowdown and the commodity complex rolling over, then I think we will see that dollar's strength accelerate further. And clearly, given the belligerent comments by President Putin last night, there's maybe more pressure and pain to come in terms of the commodity prices as well.
You touched on the euro. That ECB meeting on Thursday is a huge one. That hawkish tone is expected to persist. I'm just wondering, what does it mean for the euro? What assumptions are you making?
The problem with the hawkish tone is it's based on less solid fundamental case. So at least when we look to the Fed, we can say, yes, you've got an inflation issue, you've got a demand issue. When you look at the ECB, they've got an inflation issue, but they've got a negative output gap. So how far that hawkish talk can really carry the euro is doubtful. So we think the downside to euro dollar is at 105.
Claudio, hold on a second. We're getting some lines crossing here out of China. The customs spokesperson is speaking at a briefing, and they're talking about the foreign trade picture expected to maintain stable development. More efforts needed, they say, to achieve a stable foreign trade this year. Of course, we're still waiting for those trade numbers out of China. And Claudio, for the past week, we've been talking about these fading yield premiums that Chinese bonds now have over U.S., over Australia, over New Zealand. And yet, we still see a pretty resilient renminbi. Are these hefty exports, is that still going to be the buffer for the currency?
Yes, I think that's really the one kind of plank. It's a combination, actually. I would say, yes, the trade and the export side has been one plank of the renminbi resilience. The other side has been the reluctance for the PBOC to signal a higher dollar China. We've had maybe three very weak fixings relative to the expectation over the past 3 months, but those have been very rare signals by the market. And obviously, we've had the PBOC reluctant in its monetary easing. If they step on the gas a bit more in terms of easing monetary policy, fixing dollar China higher, that will definitely help to turn the corner in the dollar China trend. So our own forecast for dollar China at the end of the third quarter is 660. We think that we could get to 670 as an upside risk, and we remain short on the renminbi.
Claudio, before we go, just want to touch on the yen at the lowest level in about, 20 years. We had one official, ex-official, saying that it is bad for the economy, reversing what Kuroda says, which is, it is good for the overall economy. Given where commodity prices are right now, yen is likely to weaken further from here, yes?
Yes, I would say when we look at the net trade of terms impact, the reliance on energy and commodity imports, and the fact that we've got this rate differential kicking in, it's going to be difficult for the yen. Obviously, they're trying to, in some sense, play mind games with the expectations of BOJ policy to try and steady the yen when they can. But again, I think the rate differential will pull the dollar higher.